What just happened in China? Late last week, a major business figure was taken away by authorities. A sign emerged signaling a major economic slowdown, and China continues to go down the path of deflation. We're going to talk about these stories and how they relate to Bible prophecy in today's video. Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, share, and restack buttons. Well, what just happened in China? Let's start with this right here. This is from Asia Financial. It says China Vank shares sink on news of CEO's arrest and state takeover. It says China Vank shares plunged on Friday after state media reports that the group's chief executive had been detained and authorities are now overseeing operations. Vank shares plunged by 9%, but recovered to be down 3% on the Hong Kong Stock Exchange at the close of trading. Yet the news has deepened concern over the country's debt-laden property sector. And we've talked about the problem that this poses. $18 trillion of wealth has evaporated since 2021 in the Chinese property sector. They've had a massive bubble that has popped. It's sucking the country into a deflationary vortex similar to what we saw in the Great Depression. So this goes on. It says CEO Zhu Zhusheng was detained on Wednesday. The Economic Observer reported on Thursday without detailing reasons. It said the developer could be subject to government takeover and reorganization, citing unidentified sources. The CEO being taken away, or the stepping in of a working group, may sound negative at first glance. This is the optimistic viewpoint. But we believe it's important to note that the government's ultimate determination is to support China Vank to meet debt obligations. It's not uncommon for authorities to detain former executives. And notice how they use the detain in this. It says high-profile figures include Evergrande Group Chairman Hu Kai-yan, who has not been seen in public since 2023. So he's been detained. How do they even know he's still around, right? Nobody's seen him in 2 years, but that's quite a detention. It says 2 years after the world's most indebted developer defaulted on most of its $300 billion in liabilities. And China Vank has $45 billion in debt that it owes. And now those fall into question as well. So we're seeing, again, the spiral of bankruptcies and defaults, which feeds on itself. It spreads like a contagion. It says some executives have been detained with little or no public information about their fate. Yeah, again, that's quite a detention there. It says the development has unnerved investors, yes, just as authorities work to pull the property sector out of a debt crisis that has dragged on since 2021 with measures such as cutting mortgage rates and minimum down payment ratios. Now again, you can cut mortgage rates all you want, have minimum down payments. We've seen how that played out during the great financial crisis, requiring very low to no down payments. But ultimately, if the purchase price is so high, it doesn't matter how low the down payment is or what the mortgage rate is. If it's unaffordable or it's in a bubble, that's eventually the prices collapse and it comes down. It says Vank's Hong Kong listed shares fell. They already mentioned that. The developer's May 2025 US dollar notes were bid at 56.49 cents on the dollar versus 63 cents a day earlier. Again, if you're paying your debt obligations, that should be $1 on the dollar, right? Not 50 cents on the dollar. Most people like to be paid back 100% of what they've lent out, not 56% of what they've lent out. It says 2 of Vank's bond yields slid more than 20%, triggering a trading suspension at the Shenzhen Bourse. So again, these could fall even farther, but they have these circuit breakers in place that keep it from going to zero in a single day. It says Vank is a bellwether of China's property market, and the group has faced a deepening bond sell-off over the past week as worries grow about its mountain of debt coming due against the backdrop of a sector crisis that has left homes unfinished and firms bankrupt. Its financial woe became public early last year after the developer sought to extend the maturity of debt as monthly sales plunged below break-even levels. It was ranked 5th by sales value last year versus 2nd in 2023. So this is yet another major property developer in China, clearly, if not going bankrupt, on the brink of bankruptcy. And what does that do when all of this debt doesn't get paid back? Again, this is what you see in a deflationary spiral. This is what we saw during the Great Depression. And it's happening in China right now. It's going to spread to the rest of the world in due time. And we'll look at some other events that have taken place in the last week. But first, I want to turn your attention to this. If you missed this announcement before, I'll be at Grace Bible Church in Winchester, Kentucky, March 15th and 16th. So that's just a few weeks from now. So if you live nearby, you want to visit, you want to come meet, we'd love to have you there. So I'll be there Saturday at 7 p.m. as well as at the Sunday 9:15 and 10:30 services. So come on by. If you're anywhere near Winchester, Kentucky, come to Grace Bible Church. The web address is graceonmain.com. I'll put a link to that in the comments along with these dates pinned at the top of the comments so that you can learn more about that. So what else has been happening in China? Let's take a look at this from oilprice.com. It says China's refining output dips for the first time in over 2 decades. It says weaker fuel demand and depressed refining margins in 2024 resulted in the first annual decline in China's refinery throughput in over 20 years, excluding the pandemic lockdown year of 2022, government data showed on Friday. So guys, this is a clear indication of this economic slowdown that's taken hold in China. There is a direct correlation between energy consumption and economic output. It's a near one-to-one correlation. You look around at the poorest countries in the world, they use significantly less energy than the wealthiest countries in the world. So when you see a decline in electricity usage or natural gas usage or gasoline usage, these are signs of an economic slowdown because that's less energy being consumed. A vibrant, growing economy uses more energy. So guys, this is just another indication of what's going on. How about this right here? This is from Newsweek. It says China's economy faces historic setback not seen in over half a century. It says China could be facing its longest deflationary cycle since the 1960s, it has been warned, as policymakers pin their hopes on the rollout of measures aimed at stimulating the world's second largest economy. China has struggled to stabilize its economy since the end of President Xi Jinping's strict zero-COVID pandemic-era lockdowns, buffeted by headwinds such as a depressed housing market. Again, we mentioned $18 trillion in wealth simply wiped out by the collapse in the real estate market in China. A sector, they mention here, that accounts for as much as 70% of household wealth. Meanwhile, low wages and economic uncertainty have kept consumers cautious, further dragging on prices. And here they focus on prices to talk about deflation. We hear the same thing when they talk about inflation, but really the true definitions of inflation and deflation aren't rising or falling prices. They're increasing and decreasing levels of currency supply. So when the currency supply increases, as we saw during COVID, where 40% of the dollars in U.S. history were printed in a 4-year period, well, what did we see? We saw inflation. We saw rising prices as a result of that, as more currency units chased the same or a declining number of goods and services. Likewise, when the currency supply shrinks, you have fewer currency units, and prices fall as the purchasing power of those currency units is enhanced. It's able to get more because there's fewer of those currency units. The problem is, in an over-debted economy, that means there's fewer currency units available to service the debt that's been taken on, which causes people to default on that debt. And when they default on that debt, that shrinks the currency supply, which creates this vicious cycle of defaults and bankruptcies. That's exactly what we're seeing in China right now. We're starting to see that in Germany. It's coming to the United States of America sooner rather than later. It says, while China's Statistics Bureau reported the country had hit its target gross domestic product growth on the back of stronger than expected fourth quarter performance Friday, analysts point out deflation, which in 2024 continued for a second consecutive year, continues to present a long-term threat to recovery. Obviously, again, we saw what this did during the Great Depression. It's not going to be a good outcome. It says JP Morgan Chase and Company and other Wall Street lenders, cited by Bloomberg, predict the deflationary cycle will continue this year, marking the longest stretch since the Great Leap Forward, which is what these authoritarian countries, they name things the opposite of what they are, right? So it was a great leap backward. In reality, they called it the Great Leap Forward under Chinese communist leader Mao Zedong, whose policies caused a famine that killed tens of millions. The country hit its GDP target of around 5% last year, with better than expected 5.4% expansion in the fourth quarter, which I would argue is impossible when you're in the grips of deflation, right? But that's what they say, right? However, many economists, including China's former number 2, Li Keqiang, have cast doubt on China's official growth figures, a sensitive topic for Xi Jinping and one that has landed some top economists in hot water. In other words, telling the truth, right, in a world of deceit is a revolutionary act. That gets you in a lot of trouble. They want to falsify the numbers. This happens everywhere. It happens in the United States too, but it happens to even a greater degree in a country like China, where the regime in power wants to maintain that power. So they can't tell the truth about a shrinking economy, people losing their jobs, people losing their retirement savings. So they claim, hey, look at this, we're growing 5.4% last year, when in reality they probably shrank 2 to 3%. We don't know. We have no idea what those figures are, but when we see these events happening, we know they're incompatible with the robust growth the Chinese government is claiming. We also had this from Freight Waves. It says China's economy is sputtering. It says in the latest indicators of China's economic health, a confluence of falling bond yields, which is something you see during an economic crisis. We saw this during the great financial crisis. We saw interest rates, bond yields fall. So we saw this during the Great Depression as well. We're seeing it in China. We're seeing record low bond yield rates in China. It says declining GDP growth and persistent consumer price deflation paints a concerning picture for the world's second largest economy. Throughout 2024, China's GDP growth has been a subject of intense scrutiny, with estimates from China's skeptical Rhodium Group ranging between 2.4 and 2.8%. These figures starkly contrast with the official statistics reported by the National Bureau of Statistics, which indicated an annualized growth rate of 4.8% year-to-date through the third quarter. And again, they just claim now it's 5.4%. It's even better, right? It's not. It says the divergence is most pronounced in the realm of gross fixed capital formation, where investment figures differ significantly, compounded by discrepancies in household consumption data. And let's see what they say about that household consumption data. It says household consumption remains a precarious pillar of the economy despite efforts to boost consumer spending through trade-in subsidies for automobiles and household appliances. Guys, think back to the great financial crisis in the United States. They had all these programs, cash for clunkers, right? You turn in your clunker old car and we'll give you the subsidies so that people will go out and buy cars. They're trying to stimulate the economy. It does not work. Didn't work in the Great Depression, didn't work in the Great Financial Crisis. It's not going to work for China either. It says fundamental issues such as slow growth in disposable income and wages continue to hinder significant gains. The ongoing deleveraging process, where households prioritize paying down debt over spending, further limits the potential for increased consumption. Yes, and let me underscore, when on an individual basis, it's good for people to pay down debt, but in aggregate, given the monetary system we had, this debt-based monetary system, it actually turns out to be bad, because in paying down that debt, again, you're shrinking the currency supply. That means fewer currency units are available for people to service the debts they've already taken on. And so if everybody does that at the same time, they focus on paying down debt versus taking out more debt to spend further, then it actually shrinks the currency supply, causes this spate of bankruptcies and defaults, and it creates this deflationary spiral that feeds on itself until you hit a market equilibrium where the economy can grow again. So that's where China is at right now, guys. Germany, again, the number 3 economy in the world, is in the early innings of a very similar trajectory. We've talked in the past about the 4th largest economy, Japan, and the problems they face. They face an actual crisis in currency. They could see a collapsing currency or collapsing government debt. We don't know which one yet. Maybe both. Who knows what's happening there? But it's impossible to believe that the 2nd, the 3rd, the 4th largest economies in the world are entering these phases of economic crisis, and the United States, will be immune to that, because, the people who say, the economy is going strong, say, look at Dogecoin. Here we have this worthless coin that's worth $50 billion. Times couldn't be better. But guys, that's just the party before the crash. The crash is coming. Yes, we're still seeing elements of the roaring 20s, but the Great Depression is on the way. And guys, it's heading to the United States of America. How does all this tie into Bible prophecy? Well, I believe we're about to see the greatest financial crisis and the greatest economic crisis the world has ever seen. Again, we're likely to see a currency crisis in Japan. Japan likely won't be the only country in the midst of a currency crisis as all of this unfolds. And we're going to see a lot of people hit hard financially, crying out to the politicians to hurry up and fix the situation. And guys, we're at the end of the useful life of the current monetary system, so they need to roll out a new system. And I believe that new system is the one they've been telling us about for several years now: central bank digital currencies, tokenized assets, and digital IDs. And they're going to roll all of those things out. And when they do, they're putting into place a system that's indistinguishable in capability and function from the mark of the beast system we read about in Revelation chapter 13, verses 16 through 17. It is not the mark of the beast system, because we're not in the tribulation. There's no Antichrist yet during the tribulation. The Antichrist might be here on earth right now, probably is, but we are not in the tribulation. So the system, if it rolls out in the very near term, is likely not the mark of the beast system, but it sets the stage for it. It puts the foundation in place. It sets the stage, along with all the other events that Jesus and the prophets said to look for, those signs that we're seeing present in our day and age. And guys, Jesus said Matthew 24, Mark 13, and Luke 21, when you begin to see all these things take place, know that I'm near, right at the door. So guys, what we're seeing happening in China right now feeds directly into this economic crisis we're heading into, which feeds directly into setting the stage for the mark of the beast system. So what do you think? Let me know. Leave your comments below. But guys, I think that's exactly where we're headed. So hopefully you're preparing your family. Did an article last week over on the Substack at brittgillette.substack.com on how to prepare for the Great Reset and what we're doing. So hopefully many of you have read that and you're doing those things already. But we need to be prepared for this because this isn't necessarily a tribulation event. The church may have to go through this. I don't believe the church will be part of the tribulation, the 7-year tribulation. I believe the rapture of the church takes place before then. But one of the things I commonly hear people say is, well, we won't have to endure this. They assume that any sort of hardship must be part of the tribulation, but that's not what we're told in the Bible. Jesus said, you will face many trials and sorrows in this world, but take heart, I have overcome the world. Christians, since the very beginning, have faced major hardships. Christians on earth today face many hardships. We're not given any guarantee that we won't face hardships. A major storm is brewing globally in the economy. Make sure you're prepared for it. So let me know what you think. God willing, I will see you on Wednesday.